G'day everyone, welcome back to Pete's Investing. Today is June 15, 2023. This is the US S&P 500 update. On our weekly and daily, we're in a bullish signal, so predominantly bullish trades, but only if the hourly is showing bullish as well. At the moment, it's showing neutral, which means it's hit a bit of a roadblock, so avoid long trades at the moment, and also probably avoid short trades to be extra safe. So why is that? Let's look at the weekly. First off, the triple moving average of the price chart and the moving average of the CCI are both bullish in nature, and it's giving us this bullish signal on the weekly chart. On the daily, likewise, they're both very bullish in their nature, but notice on the daily it's hit this key resistance up here at 43.75, which we drew some time ago. It's hit it 3 days consecutively, and it's currently got a very slight red candle as we speak. So the CCI is still improving, hence it's giving us this bullish signal. Now, if you follow my videos, you know I only trade when the weekly and the daily are aligned, but also when the hourly is aligned. Now, why do I say don't go long at this point? Because apart from hitting that resistance, you'll see here we've got this bearish divergence on the CCI. We drew this last time in our last video on this dotted line here, and we did put in a target, these two target areas, this initial target between the 38 to the 50% and a secondary target between the 50 and the 61%. And you can see here you would have entered the trade once that broke below the channel, and it did. And you can see there's a wick, and that wick broke through both those target areas. So this was drawn in our last video. Just go back and watch that if you're not convinced. I didn't draw these today. You can see there it's currently fluctuating along that key resistance area at 43.75. So that was just the initial divergence play out, and it played quite nicely. But notice also the CCI is still declining, and there's no sign yet of it increasing, and that'll be one sign of a potential break above this key resistance area. So at the moment, hold off going long, but also avoid short positions at the moment until we see a significant break to the downside. And as I always say, make sure your weekly and a daily are aligned before taking those trades on the hourly. And what I've got up here as well is some a long back test and also a short back test. And again, only trade in the direction of the weekly and daily. And what I mean by that is, so you can see there where these are all averaging down. We don't use stop losses. So you can see there where we average down on the weekly and daily. If I zoom out to the 2022 period, you can see there on the left, predominantly short trades here on the daily, and here on the weekly. So you would have avoided those long trades. Predominantly they would have been short trades only. Likewise, when the price is increasing, you would have avoided those short trades. You can see there would have been some short trades there, and that would have been avoided going long in those areas as well. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also scan for stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.